ignoring noise and continuing the uh, uh, SIP. However, if my average purchase price is maybe, uh, I think he's talking about entering at higher NAVs and all that because of market valuations. So, so this is a question on the behavioral side. I'm not able to fully comprehend the question, but let me add to it. In the last 2 3 years, especially during the pandemic times, we've seen a lot of Indian investors, especially youngsters, taking to uh, uh, um, equities, directly investing in equities, and a lot of demat accounts were opened. Cryptos were a fashionable thing. So that showed that Indian investors are risk taking. There is no problem with risk taking as such. However, there are a lot of questions in terms of direct investing, mutual fund investing, etc. But this whole thing about ignoring the noise, I mean, tomorrow, if there is a big crash, the newspapers are going to report like so many lakh crores of investor wealth is eroded. So, what broad guidelines or suggestions you have for young investors to wade through these opportunities in Indian equities?
I think the advice is the same, whether it is a young investor or a middle-aged investor or a long-term investor. This is a very simple business to navigate. We make it very complicated. There are two, three things to focus on. Focus on asset allocation, because the difference between equities and fixed income is 6 to 7% over a longer period of time. Focus on the long term. Don't think that long term is 3 years and 5 years. When you invest in insurance, you invest for a lifetime. When you invest in mutual funds and the equities, why do we think of 3 years and 5 years? Why do we not think of 10 years in a lifetime? Keep your horizon very, very low. Invest systematically, and as and when, if and when the market corrects, be more aggressive. Be more aggressive in a falling market, be more conservative in a rising market, right? Don't put in money that you have a need for in the near term from a liquidity standpoint. If you follow these simple basic principles, avoid the noise, you stand to do well. It's true for young investors, especially because they're starting off their journey. In fact, I would say start as early as possible. Because when you start at 20, it's easy to have a 30-year horizon, right? So I think invest as long as possible, invest systematically, invest for the long term, take advantage of dips, keep asset allocation in mind. And that's how, if you look at investors who've made huge material money in the markets, they've all followed this principle. They have not traded the market. They have not tried to time the market. They have spent time in the market, right? So I think that's a good note. If you don't mind, Ram, close it on. And I think once again, from Team HDFC, we'd like to wish all our investors a happy and prosperous Diwali with their loved ones. And we look forward to interacting with you in the future. We thank you for all your support. And with that, I'll hand it over to Ram once again and to Ashok for any closing comments.
Thanks, Chirag. So, thanks a lot for the detailed coverage on the markets, economy, and valuation. So, I'll hand it over to Ashok to finish it off with this.
Yeah, so thanks, Chirag. Thanks, Ram, for this call. What I would say in a conclusion is that just look around us. When you look at India and outside India, when you look at our neighboring countries, China, or maybe large countries like China or Russia, or what's happening in Europe, or even our neighboring countries, just smaller economies, Sri Lanka, Pakistan, Afghanistan, you can actually sense the difference when it comes to India. And therefore, we titled this call as Indian Oasis in Desert. And one more thing which I want to leave this thought with investors, while markets are range bound for last 12 months, last October it actually topped and markets are trading a discount of 5-6% from there. But there are funds whose NAVs are higher than what they were there in October, meaning there is a divergent trend between the fund performance and the market. And therefore, just don't assume that because markets are not performing, therefore funds are not performing. Funds continue to perform. So that is for you to decide, look, assess, and find out which are the funds those are doing well. And some of the funds that we already have been outlining for you. So I am saying that using deep is always a good strategy, but staying invested is also equally good strategy. Rather than getting worried about what is happening with the noise all around us, sometimes sitting quietly. So we always say that stay invested. Time plus patience is all about wealth creation. So that's what our message is. This is the first Diwali after a gap of 2 years, which is COVID free. So let's appreciate and celebrate India. Wishing you all and your loved ones Diwali, happy Diwali, and a prosperous New Year from the HDFC AMF team. Thank you for joining the call and have a great time
Thank
ahead.
you, everybody.
Thank
Happy
you,
Diwali.
everyone.
Thank you. Before we end, we have to show the slide, which is a statutory one. Thank you very much. Thank you, everyone. Thanks for joining.